Market watcher Adam Johnson is with us, and we're talking Wells Fargo. How about that? Now, we don't very often have guys like you on the show.
Oh, come on. Well, you should. Why wouldn't you? I won't bite, I promise.
You say that Wells Fargo, at $43 a share, is a buy because it's cheap?
Yes,
Make
it
your
is.
case.
It's gotten very cheap. What Wells Fargo did may be deplorable, to borrow a phrase. It's not debilitating. And here's why. You had fewer than 1% of the employees create false accounts for fewer than 1% of the customers, and the average cost to each of those customers was $25.
Okay.
All right. The total amount that Wells Fargo made from this whole fiasco, and it's turned into a fiasco, a political witch hunt, was $5 million.
But they're going to be sued by everybody and his brother, and they'll have enormous political support for all of those suits, and they could take billions and billions of dollars off them.
Well, consider this. They've already paid $185 billion in fines, all right? Again, for something which created a benefit of $5 million. That's 35 to 1. Typically, when you go to court and you're sued and there's a punitive fine, it's 3 to 1. All right, this thing's already 10 times what you'd find in court.
So they're inoculated against a serious legal judgment against them. They've got the money to pay, and 43 is a good buying price.
They've got the money to pay. This is a company, by the way, a bank, that earns $20 billion per year. It underwrites 1/4 of the mortgages in this country. It's so vast. If every single state did what California did and said, we're not going to do our municipal underwritings with you, it would cost them $100 million in lost fees. Again, they make $20 billion, $100 million. The point is, at 10 times earnings and 1.2 times book, I'm sorry, Stuart, it's too cheap. You need to buy this, and the big guys are buying it.
Okay, you make a good case.
All right.
Right, now, how about Amazon? Go to the other extreme. Would you sell that on the grounds that it was earlier? Right now it's $8.35.
Yep.
It was $8.42 and change at the new high. You think that's too high? Would you sell it?
Amazon is the cheapest $842 stock I know, and here's why. It's growing earnings at 80%. You should be willing. Yes, it's growing earnings at 80%. And that, by the way, is because Amazon Web Services. This is what's so fascinating about Amazon is it's the company we think we know, but we don't. What's driving the growth at Amazon is Amazon Web Services. These guys are the back office for websites around the world. It's growing so quickly that by 2020, AWS, Amazon Web Services, will actually earn more money than Amazon, the retailer.
So you'd buy it today?
I'd buy Amazon at $842. Yes, I'd buy it. It's cheap for a very different reason than Wells Fargo is cheap, but you know, you have to look at each company on its own metrics.
Would you just hold on for a second?
Sure.
I want to get to this